Let us now shift the spotlight to China, the world's second largest economy. Its manufacturing sector is reeling under pressure, and that is all thanks to the trade policies under US President Donald Trump. Factory activity in China contracted at the fastest pace in 16 months in April. The official Purchasing Managers Index, or the PMI, dropped to 49.0 from 50.5 in March. That's the weakest reading since December of 2023. Now, to give some context, the PMI is a key barometer of manufacturing health. It tracks business conditions like output, new orders, and employment. A score above 50 means growth, below 50 signals a slowdown, and China's April reading clearly points to a decline. The sharp drop comes just weeks after the US slapped 145% tariffs on Chinese imports, part of President Trump's so-called Liberation Day trade package. The move effectively derailed what had been a modest 2-month manufacturing recovery. The impact of the tariffs has been immediate, and it's sending shockwaves through China's export sector. Exporters had been rushing to ship goods before the tariff deadline, but that strategy has now hit a wall. Some estimates reportedly say that cargo shipments have dropped by as much as 60%. Experts believe a key component of the PMI, the New Export Orders Index, fell to its lowest level since 2012, excluding the pandemic years. It's a sign that demand from overseas markets is weak. And it's not just the factories that are feeling the heat. China's broader economy is losing some momentum too. The non-manufacturing PMI, which tracks activity in services and construction, dropped to 50.4 from 50.8 in March. Now that's still above 50, but it shows that growth is weakening. China's National Bureau of Statistics blamed the downturn on sharp changes in the external environment, a clear reference to the tariffs. So what is Beijing doing about this situation? The government has reportedly moved to support exporters with loans and stimulus measures, though no major new economic package has been unveiled. Instead, they're reportedly focusing on implementing measures already approved in early March, before the full impact of the tariffs were felt. It has also responded with 125% duties on imports from the US. However, economists remain cautious. The Chinese economy is facing headwinds, with GDP growth expected to be lower than official targets of 5% this year. But despite these struggles, China is not backing down on the diplomatic front. Beijing has rejected the idea of seeking talks with Washington as of now. China's Foreign Minister Wang Yi earlier this month warned countries against caving into US tariff threats, saying that appeasement will only embolden the quote-unquote bully. So, as both Beijing and Washington dig in, it seems the trade war is far from over, and the global economy could be the one to pay the price.
Greeting you with aloha and namaste.
I love India.
Presence, occupation of a territory by another country pertains to India, what we saw in Kashmir.
How do you see Trump's America?
Yes, the current administration behaves differently from the previous administration.
Are you saying that there are foreign powers who are trying to bring down the current government in Syria?
Exactly.
Iran, maybe Russia too.
Prime Minister Modi committed to South-South, cooperation.
Not over 50%.
Is Ukraine prepared to pay the price for that peace?
No compromises at the cost of territorial integrity and sovereignty.